Well, hello and welcome to Business Morning. Well, we see the trading month of November is winding down, and the month-to-date performance of the all-share index, that's down about 0.4%. So I guess it's not in November to remember at this time. But let's get to the top stories that set your agenda now. Starting with the FX market, we see the NAFEX rate as a spot market that depreciated by about 13 kobo. So the marginal decline there, that's for the NAFEX window, 1,689 naira. That was the close to the dollar yesterday. For NFM, 1,660 naira. So it's still that trading band there, down about 0.08%. So marginal losses. That's for yesterday at the close of trade in the FX market, and it's still the trade after the MPC decision. That was the last one for 2024. Then, most times we expect some kind of strengthening for the domestic currency, but there's still volatility right there. But we hear the central bank governor there saying that the naira has been stable since June. Let's get a check on the oil market now. One of our major FX revenue drivers there, $72.69 per barrel. That's for Brent. Weakness again, down 0.2% in early trade today, and we'll see for the U.S. WTI crude that also dipped in early trade today, 0.2%, $68.58 per barrel. That's so it's still the same issues there impacting the oil market. We'll drill down on what's driving sentiment and if we can see some kind of strengthening for the prices, and maybe the bulls can come back into the oil market. All right, to other stories now. I would see the Nigerian Upstream Petroleum Regulatory Commission, that's the NUPRC, they said they've exceeded its 2024 revenue targets by 49%, despite global challenges in the oil industry. This achievement was revealed during a public session reviewing Nigeria's medium-term fiscal framework. The NUPRC attributes the revenue boost to regulatory reforms, efforts to eliminate inefficiencies and attract investment, even amid global divestment from oil and gas assets. The NUPRC's chief executive, Agbenga Komolafe, expresses optimism about continued growth, citing initiatives like the 1 million barrels per day project and the drill or drop policy as key factors driving success. And now for the budgets. Now, the Enugu State Governor, Peter Mbah, has unveiled the 2025 appropriation bill, totaling 971 billion naira to the State House of Assembly. The budget, titled Budget of Exponential Growth and Inclusive Prosperity, aims to accelerate development across the state. The budget allocates 133 billion naira to recurrent expenditure, while 837 billion naira is earmarked for capital projects, nearly double the 414 billion naira in the 2024 revised budget. Take a listen.
We're proposing to the House of Assembly today a budget with a total envelope of 971 billion 84 million. As against the budget for 2024 fiscal year, which totaled 521 billion 556 million 386,000. This represents an 86.4% increase from the 2024 reordered budget.
All right, now let's get a check on what's playing out in the commodities market. And top on the agenda is still the Port Harcourt Refinery and other matters in the market. Joining us now is Mr. Bismarck Ruwani, MD, CEO, Financial Derivatives Company, joining me via Zoom. Great to have you on the show, sir.
Good morning, thank you for having me.
All right, so we've seen all marketers, they've set conditions for using the newly renovated Port Harcourt Refinery, demanding that it sells refined petroleum products at prices lower than those of the Dangote Petroleum Refinery. How are you seeing this?
First and foremost, let us get one thing very clear. One is that the total market, the total size of the industry is a figure, but that the Port Harcourt refinery, the old Port Harcourt refinery for that matter, is producing only 60,000 barrels. 60,000 barrels is nothing. It's less than 5% of total supply in this market. Dangote's refinery has a 685,000 barrels capacity, and this particular refinery has 6,000. So they are price followers. They cannot be price leaders in this industry. Two, they are producing in Port Harcourt, and the product has been lifted to other parts of the country. So
sorry, who's handling the switching of cameras?
So that is what is happening now. So as far as I'm concerned, the price leader and the dominant player is the Dangote refinery. Dangote refinery has announced 970, and the Port Harcourt refinery is actually selling at 1,045, 75 naira above that. So, number one, clearly, the price leader is Dangote refinery. The price follower is Port Harcourt refinery. And then the other modular refineries are also going to be following suit. Now, Dangote has brought down its price for now as a year-end gesture. And the price of crude globally has actually come down to about $72. So what goes into it is the cost of production, the global price of crude, and generally speaking, it is said, according to the NMPC, that the total demand in Nigeria is about 49 million liters a day. Dangote says that it's about 30 million liters. So there's a 19 million liters difference between what NMPC says is the total demand and what Dangote says is the total demand. No matter what happens, I think that it is clear that there will be no queues, and also the quality. The question of quality is another issue. I think that Dangote they have laboratories to test the quality of what they have, and NNPC also claims that their quality is of the highest standards. But generally speaking, the Nigerian consumer benefits when there's a price war, and the distributors also benefit from this. What we have noticed, though, is that the retailers have not reflected the new price of the Dangote refinery yet. So we are still seeing everybody selling at about 10.50, 10.80, 10.30. We need to see those prices come down below 1,000 naira a liter. And then it begins to play in to the transportation logistics cost, and then begins to have an effect on inflation. But right now, at least we are not seeing the price increase. At least we know there are no queues. At least we do know that the quality so far has been good, and we have had no stories about that. So generally speaking, I think it's a good development for the refinery to come on stream. But like they say, the sweetness of the pudding is in eating. Let us see how long they can stay afloat. And what is the extraction value for every 100, for every liter or every barrel of oil? What do they get out of it? Because if you are getting less efficient output, then it won't take long before those refineries will go into financial difficulty.
All right, so, definitely seeing what's playing out, with the refinery so far, do you think, at some point we'll see some kind of price war, with the refineries? And how do you think this matter would, conclude at some point? And do we expect at least, competitive prices for PMS?
I think that, yes, there'll be a price war, but in a price war, the man who has control, the man who has the largest supply is the one that can come out. And in a price war, if the government, for that matter, should not be involved in a price war, what you do is to ensure that the prices are not, there's a consumer protection agency, which will ensure that the prices are not gouging customers. And you can see that already, even in different retail outlets. You go to MRS, you see a price here. You go to Mobile, you see a price there. You go to Corn Oil, you see another price there. So, but that's efficient. Price competition is good for the consumer, right? And I think that for the first time, for the first Christmas in many years, there will be no queues. There will be no, there will be availability across all parts of the country, and that you can see that the pressure is on the suppliers, the NNPC refinery, the modular refineries, the Dangote refinery, to ensure that the consumers are happy and that they have quality and they have a good price. If not, people can get it from anywhere else. And if people can import, the independent marketers are threatening to import, so bring it down, to bring down the prices. So this enables us to have an efficient industry. But remember that the refining business is high volume, low margin. The margins are very thin, and the financing cost is pretty high. So I think that competition is good, but with cannibalistic competition where competitors kill themselves, all right, is not good, because in the end, everybody suffers. So I think a fair price is what is required, and that fair price today is roughly at about where the Dangote refinery is saying 970. I won't be surprised to see prices come down a bit lower when the price of oil begins to fall to $70 a barrel.
All right, definitely from what you've said, so far, it seems we might not have that regular Christmas period fuel queues. We know we've had that trend for the longest time, but I'm going to be watching out for this Yuletide season. But before we get into other matters now, we're seeing oil prices. Brent seems to be looking towards sub $70. How are you seeing the market play out?
I think that, generally speaking, because of the truce in Lebanon and the escalation of crisis between Ukraine and Russia, I think that you are going to be seeing prices come down to about $70. But below $70, even the shale producers in America and the fracking producers begin to have difficulty. So it will be good to see it at $65 a barrel, which is where it is. But remember that our budget was based on an assumption of $75 a barrel. Right now, you're having a spot price at least $3 or $4 below our benchmark price. And our benchmark price is the price at which, after higher than that, we begin to accrue to excess crude account and savings. So it actually puts our budget in a very bad light at this time. I suspect that when the budget is presented by the president when he comes back from Paris, we are going to have to reduce that benchmark price to $70. And that means that our revenue targets become slightly, underwater. And it could mean a lot. So while on one hand, the price of petrol will reduce because of that. On the other hand, Nigerians' revenue aspirations and investments in the oil and gas sector will suffer. And that's a tough situation for Nigeria at this point in time, especially when we have all of these ambitious goals to make the economy get to $1 trillion in size by the year 2030.
Yeah, so let's look at the FX market. Now, we know on Tuesday, the Central Bank of Nigeria issued guidelines for interbank trading system, matching system, FMs, setting the minimum tradable amount at about $100,000. So how does this CBN's FM's initiative aim to, enhance transparency and efficiency, in the foreign exchange market?
Yes, Ladi, what I told Nigerians on Tuesday night on the network news, 10 o'clock news, was that the Nigerian naira has been misaligned from its fair value. There's what we call a fair value, we call it market value, and the official price. And one of the reasons for this is the market structure. So technically speaking, what actually happens is that you have an auction system and then you migrate into an efficient interbank system. What the central bank is doing, I suspect, is that, one, they are selling money to the BDCs at the retail level. They are selling money to the banks through the system, through the normal system. Now they are introducing this matching system where banks can trade amongst themselves using the Bloomberg terminals. So you see exactly what price they are selling, what volume is being sold, and it brings about transparency and price discovery. That way, so you will see that the market, the industry, or the foreign exchange market is now transitioning to become a much more efficient market. Now, the difference between the market price, which is 1,740 now, the official price, which is 1,690, the difference is about 2-3%, and there's no incentive to arbitrage. And now, when you have this matching system, and we now begin to see that the prices begin to come close together, airline prices, oil company prices, and all of that, and that it will squeeze out the the people that actually come in illicit flows of money into the system. So I think it's welcome. It will not have an impact immediately, but essentially what we believe is that the naira begins to appreciate very slowly between now, December, January, and February. Then you begin to see some value accretion there. But we shouldn't be too excited that we are going to see the naira dollar rate at 1,200. No, the federal government in its budget used an assumption of 1,400, and I think that it will take a long time before it gets to. And my target is that it will be at about 1,550 to 1,580 by February next year. All things being equal, touch wood.
All right, all things being equal, we'll keep watching to see how they perform going into 2025. But thank you so much, Mr. Bismarck Rwani, MD, CEO, Financial Derivatives Company. It's great having you.
Thank you for having me.
All right, so coming up after the break, we'll dive into the outlook for restaurant inflation in Nigeria. What factors are driving prices higher and how are businesses adapting? That's our next conversation. Do stay with us. Welcome back. Well, the National Bureau of Statistics third quarter GDP data highlights strong growth in the accommodation and food services sector as for Q3 2024, both nominally and in real terms compared to the same period in the previous year and the preceding quarter. However, its contribution to GDP, that's for nominal and real, showed mixed results, slightly decreasing compared to the third quarter of 2023, but improving from the second quarter of 2024. Well, joining me for this conversation now, we have Tosi Onofoye as a co-founder, CEO, Chow Central. And Chow Central, Y Combinator backed. This one is joining me right here in the studio. It's great to have you.
Thank you so much.
So I remember, at some point, not too far away, I remember when you would go to a restaurant, for some fine dining, maybe just the two of you. And you end up spending maybe 15,000 to about 30,000 naira for two people. There was a time like that, fine dining. And it wasn't so long ago. But now we're seeing that get up to 90K or 100,000. So prices are going up, and we've seen food inflation that topped about 40% at some point, but came down back maybe about 38, and wound back up to about 39%. So talk to me about what's driving this restaurant inflation and how the businesses are navigating it so far.
Yeah, thank you so much for that. Happy to be here. Speaking on inflation, right? So inflation is a big problem in Nigeria for every business, really. Particularly for those of us in the food space, inflation has been a pain in the ass, just to say, right? And I think every restaurant has to understand their target customer, and then follow on by streamlining their operations to suit their target customer, and still make a profit or build a sustainable business while doing that. So for us at Chow Central, right, what we have done is to provide affordable food to as many people as possible, and we have done that by streamlining our processes, right, having long-term partnerships with our suppliers as well. And these are the things that we've seen have been very critical to tackle inflation in Nigeria. Yeah.
Right, and looking at most of these restaurants, and seeing that food inflation is also rising at this point, how are you seeing demand for fine dining, so far in 2024, and festivities that's upon us, at this time? Do you think Nigerians will be going out there to these fancy restaurants and having, nice, lunch and dinner?
Yes, right, we can say that disposable income is shrinking, right? So people have less disposable income to spend on frivolities, right? But there's still a large market. In Nigeria, for example, we have over 200 million people. So we expect that a lot of people have to eat. Food is a necessity, so people have to eat. Now, as concerning fine dining, right, there's a decrease in the amount of people that are opting for fine dining. But for us, we're positioned more for affordable dining, right? And we've seen that continue to grow. A lot more people are seeking convenience day by day. So we are seeing that as long as you are able to position yourself to serve customers in this new business climate environment, you'll be able to continue to grow as a business.
So when you're talking about affordable dining, I guess the amala joints are still doing pretty well.
Yes, so the amala joints, despite the fact that they had to increase their prices, they are still doing pretty well. Exactly.
So we're seeing price rises, from fine dining all the way to affordable. And talking about, most of these amala joints at this point, we're still seeing demand, still able to, cope with the price rises. They're not as astronomical as what we see with other segments, right?
Yeah, so by that you mean that we are still seeing demand even despite inflation, right? Yeah, so we're still seeing demand despite inflation, but that is because we've been able to create, we've been able to go back to the drawing board and innovate. So at 500 chow, what we have done is to, for example, come up with meal combos that reduce the prices for customers, right? So you want to essentially eat jollof rice, plantain, and a piece of protein. We understand that for lunch, that is all you need, and we have done that in a way that is affordable for you when you need lunch. So at a time where you have, let's say, loose cash in your pocket and you want variety, you want high margin meals, you can also come to the platform and you'll be able to get high margin meals. So most restaurants are what we do, and I believe that's what most successful restaurants would do, is to have a menu that helps people when they need affordable meals, so they can get really affordable meals. And even at the time where they want to spend on other things, there's still other things on the menu to spend.
I'm talking about, some of these affordable menus. I've seen some of these brands, come up with the, hungry man package, where you maybe have one piece of egg and maybe jollof rice and a couple of other, condiments. But, looking at those kind of menus, they're trying to help the customer get something affordable. But how is that, playing into revenue for most of these companies? Is it affecting them negatively or is it positive?
So it's positive, right, on bottom line revenue, and it's also positive on growth because we understand the problem. It just shows that you have a clear understanding of what the problem is and how to best meet your customers at their point of need. So you need to create an affordable combination of meals to serve customers in this business climate. But you still need to do it in a way that you are building your business to be a sustainable long-term business. So it needs to make business sense for you. So despite the fact that we have combos together, it's all architected and orchestrated in a way that it makes sense for the business long term, and we are able to serve our customers' needs. Yeah. Right,
and going into this Yuletide season, it's another Christmas, and some have described this Christmas as coming at a really, really difficult time. Where we're seeing petrol prices at levels we've never, seen before. We're seeing food prices high, the price of a bag of rice, and all of that, high. So, what are you seeing for this Yuletide spending?
So for the spending in particular, right, we already know that the climate, the macroeconomic climate is not so good at the moment in Nigeria. So we expect to not see as much as we usually used to see last year, for example, right? But we still believe that we're going to see trend in people spending. A lot of people have worked really hard this year and they want to enjoy themselves by the end of the year. Speaking to what you earlier mentioned about the increase in fuel hikes and things like that, right? Our business is best situated to sort of solve that problem because we have a cloud kitchen model where we launch dark kitchens in strategic locations to help reduce delivery fees and make ourselves more accessible to customers easily. So it makes it cheaper. You don't have to move too far to get the food and things like that. So once again, it's really understanding the business climate and bringing out innovative solutions to solve it for the customers.
And looking at the food delivery business, we know even the dispatch riders are going through a lot, right now. And sometimes they pass on that aggression to the customer, sometimes not delivering the food on time or, having issues on getting to the location. And you hear they don't have maybe this permit or Lagos State permit or Ogun State permit and all of that. So how have you seen that food delivery segment?
Yeah, so it's a booming segment, right? As regarding demand, a lot of people are seeking convenience. We've seen the trend move from people seeking cravings, and when maybe on your birthday you go out to eat. Now people are going out to eat when it's just because it's more convenient, right? So convenience is on the rise. And on the side of rider behavior, we leverage technology for these things. So a lot of things are being properly tracked using technology. With the rider's app, the mobile app the rider uses, you're able to look at his GPS, you understand where he is at every point in time, and that incentivizes the rider to want to deliver the food on time despite how he feels, right? So we don't rely on how he feels, we rely more on our system and our processes, and that has really driven us to make sure we can give our customers.
It's quite interesting. I remember one experience I had with one rider, at some point. He was supposed to deliver food to me from a restaurant, but he didn't make it. He said his bike got impounded or something. Then he took that same food to go and return back to the restaurant the next day. Imagine my food staying overnight and going back to the restaurant, me losing money. So definitely that segment, there's a lot of reforms we need to see there, to make it smooth.
Yeah,
that's the whole process of getting food delivered and all that. But I also know you play in that industry where a lot of people, a lot of businesses, startups, we keep hearing of raises here and there. This startup has raised this amount and backed by this company. So talk to me about raising funds, at this time for business. Was 2024 easy, for raising money?
Well, so I would say that when it comes to raising capital, right, it really depends on the business you're building and your capacity, right? So for us, we've been building a long-term sustainable business, and raising capital has not been difficult for us because of what we're doing. And also looking at emerging trends, right, we are building a technology-enabled business. And in these times, technology is so important to, pushing your business and driving your business. So I think for us, because we've been able to put technology into our business and have it as a key driver for our growth, that has simplified fundraising for us. And yeah, I think that's an advice to every business owner. You need to incorporate technology into your business and use that to drive your business.
Right, and talking about incorporating technology, for your idea and all of that, what would you say is that sweet spot that investors are looking for, right now? If you're trying to raise capital and you're watching this show now, you have that fantastic idea, but you don't know how to raise the capital, what would you say is that sweet spot investors are looking for that would be a no-brainer? They would invest in your business or give you that capital?
Well, so as a builder myself, I wouldn't exactly know what an investor would want, but what I would say is, I wouldn't exactly know how they think, but what I would say is you need to really focus on building a business that can scale, and a business that the unit economics make a lot of sense. So you're scaling a positive unit economics business where you make money from every single transaction and you don't have to be there for multiple or thousands of transactions to happen. So at 500 Chow now, we have multiple kitchens that we've set up. I'm here right now with you, right? And we have orders being delivered because we have processes, we have technology in place to ensure that these things can happen. And by the end of this year, we hope to open even 5 more kitchens. So it means that we have built our business in a scalable way. So if you want to easily build a business that investors will like, you need to build a positive unit economics business that is easy to scale or can scale.
Right, yeah. So it's not about your face or how you look, it's about what you're building at this point, and they'll pound there. They'll be like, take my money at this point. That's for the investors.
Well, so the thing is, yeah, because everybody has, if you have money in the bank,
right,
your money is best spent if you give it to somebody to make way more money for you, right, rather than just having it in the bank. So as long as they're able to see that this person is trustworthy,
yes,
this person is going to deliver on what they've promised, I think
and bankable. Thank you so much. It was great having you, Tosi Nofue, co-founder, CEO at Chow Central. Thank you so much for coming on today.
Have a good day.
All right, so there you have it. That's show today. Markets are open right now, and we see the last trading week of November. That is coming to an end, but we'll get a sense of what to expect for the Santa Rally. Is it going to happen? Thank you so much for watching. I'm Ladi Williams. I hand things over to the Sunrise Daily team.